I just read a pretty wild stat, and it's that over half of condo investors in the Greater Toronto Area lose money every single month. After reading that stat, I decided to make a video to show you what's going on in the condo investment space in Toronto and the GTA. Urban Nation and CIBC released a report a few days ago which takes an extreme deep dive on the economics of condo investing. But this report is incredibly long and detailed, so I don't want to walk through the entire thing. Instead, we'll take a look at a few of the points, and I'll also link the article in the description below. Now, before I go any further into this video, I'd like to know what you think. Are you surprised that more than half of the GTA condo investors lose money every month? Let me know in the comments below. My name is McCallum and I run a real estate team here in the city of Toronto, and we specialize in residential resale with a heavy focus on condos. Please do me a favor to click like and subscribe to be notified when I release another video. Liking and subscribing really helps grow this channel and sends videos like this one out to more people looking to learn more about the Canadian and Toronto real estate markets. And if you'd like to schedule a call with me, you can do so by going to the first link in the description of this video and booking a meeting directly into my calendar at a time that works best for you. The article starts off by saying that lack of supply in the resale market is working to stabilize prices and has the Toronto housing market moving into a seller's market territory. Essentially, what we have here is a supply and demand imbalance, which we have consistently had for a number of years. Now, everyone knows when we have too much demand for too little supply, we see prices increase. That's just basic economics. Unfortunately, we're not just seeing a lack of supply on the resale market. We're also seeing a low level of completions or lack of supply in the pre-construction space. According to Urban Nation, per capita housing completions in Toronto dropped to a more than 20-year low in 2022. And rank last among major centers. As you can see from chart 2 on the right-hand side titled Low Level of Completions in the GTA, Toronto ranks dead last with just over 4 completions per 1,000 people in 2022, whereas Calgary has just over 8 completions per 1,000 people, which is double the number of completions than Toronto. Since the time to complete a pre-construction condo in the city of Toronto is around 4 to 5 years, there is a lag effect for the resale market. If there are too few condo starts today, then we'll see the negative impacts in a couple of years. With too few housing completions in Toronto, competition is therefore expected to get worse given the very strong growth in the Toronto population. Now, let's get into the GTA condo investor market because that's what this video is all about. Urban Nation states that in the GTA, the condo market does all the heavy lifting for housing supply, where condos represent the higher share of residential construction in the country, and this has been seen in the top right of your screen in the chart labeled Condo Starts, Toronto Leads the Way. In Toronto, since condos play such an important role in our housing market, making up just over 60% of the GTA's total housing starts in 2022, it's important that we continue to see growth in condo housing stock. Investor demand is therefore of critical importance for the housing supply outlook. If investors aren't buying, developers won't be building. In chart number 6 on the left side, we're going to take a look at new condo prices, which is in the light blue, resale condo prices, which is in the dark blue, and condo rentals, which is in gray. As we can see in the light blue line, new condo prices have, for the most part, always been higher than that of resale condo prices. But since the rise of interest rates at the beginning of 2022, which caused the resale market to drop in value, the pre-sale market continued to go up and then level off. Because pre-sale and pre-construction condos are priced on developer margins and future values, the pricing model or evaluation of pre-construction condos did not drop dramatically with interest rates rising. We also need to consider that the cost to develop the building increased due to construction costs, which is another reason for pre-sale prices not dropping. Developers need to hold their already thin margins. The question then becomes, in this case, why are investors purchasing pre-construction condos over resale condos if the price is significantly higher? And the reason is that it takes around 5 years for a condo building to be developed in Toronto. And in that time, historically, resale prices have been able to catch up to pre-sale prices, and for rents to also increase to cover the costs of ownership, providing strong leveraged returns. And as we can see from chart 7 on the right side, 72% of GTA condo investors purchased pre-construction condos. So investing in pre-construction is far more popular than investing in resale condos. One of the stats that I find incredible is in chart 9, which details that 25% of newly completed condos do not have a mortgage. So 1 in 4 people who close on a pre-construction condo will not carry a mortgage on that property. The question for this scenario is, who are these people? And the answer that I typically find is that the people who are purchasing pre-construction condos and at the time of closing are not obtaining a mortgage on that property are those who are downsizers and homeowners who are purchasing condos for their children. Now, this is where things get pretty interesting. In chart 10 at the top right of your screen, we can see that cash flow positive is becoming less achievable as the years go on. In 2020, 60% of mortgage holders on new condos were cash flow positive. However, in 2022, that number dropped to 48%. Although rents reached new highs in 2022, the growth was more than offset by rising mortgage costs as interest rates soared, resulting in the average investor of a newly completed condo experiencing negative cash flow for the first time. In 2020 and 2021, the average rent was higher than the average combination of mortgage payment, condo fees, and property taxes. However, in 2022, there was a shift in cash flow. As we can see in chart 12 on the left side, the average cash flow positive for the GTA newly completed condos in 2020 was positive $63. In 2021, it was positive $26, and now 2022, it flipped to negative $223. So investors who were closing on new condos with mortgages were now experiencing negative cash flow. This video was quite stats heavy and felt quite doom and gloom. However, the report was to show this shift in condo investing economics and how that may negatively impact housing supply. And the reason I say that this may negatively impact housing supply is because condo investors are needed in order to get housing stock into the market, whether that be for resale in the future or for rentals now. The reason we do not see many purpose-built rentals in Toronto and the GTA is because it makes more economic sense for developers to sell the individual units than it does to build a strictly rental apartment. And what I mean by that is if a developer wants to build a purpose-built rental property, they need to put in more upfront equity, as opposed to if they are developing a condo building where individual investors put up the equity in order for the developer to obtain a construction loan. With that said, the bigger picture issue is investors may no longer be able or willing to buy condo presales to the same extent as in the past. This raises the risk of reduced new condo demand, new construction activity, deliveries, and ultimately rental supply. All of this speaks to the need for more purpose-built rental housing, but it's not as easy as one may think.